My name is Abigail Penzell. I'm a partner, general counsel, and chief compliance officer at Bienville Capital. We're a New York-based asset management firm with just over $4 billion in assets under management. We have both an advisory business and a private funds business in which we manage both open-ended and closed-ended funds. So recently, and in the last couple of years, there's been some case law that has been viewed by the industry as really expanding traditional insider trading theory. In particular, the Panuwat case, which we'll cover today, in which trading in the securities of one company while in possession of MNPI about a different similarly situated company that was a competitor with similar characteristics was brought by the SEC. And this case really sort of rattled the industry because folks had really not thought of it that way in developing their policies and procedures, their trainings, and their testing. Others, like Commissioner Growal, thought that this was just pure and simple insider trading, and the particular fact pattern was non-controversial. Whatever your view is, it did cause professionals to look at the policies and procedures they had in place and how they trained their supervised persons to try to make sure that they were prepared to address similar fact patterns internally. Regular training, being approachable, knowing what your people do, being in frequent contact with them, knowing what your business lines are, knowing what any new strategies are, knowing the touch points of information that's coming into the firm and leaving the firm. I think those are the ways that you foster a culture of compliance with regular contact, being approachable, training frequently. And I think we touched upon a bit tone at the top, right? And so that's not something that you can necessarily create. You kind of can foster it by having open dialogue and continuously discussing priorities and the importance of our role as fiduciaries. But it's something that comes with time and relationship building, I think, more than anything. So I think from a compliance perspective, it's quite similar to what we've been discussing already. If you have built your compliance program, which most CCOs have, and tailored it to the specific risks of your business, then as time goes on and as you move into the future, you should be able to adapt it and tweak it for new strategies or new trends in the industry. AI is very big right now, and so when you're thinking about how do I incorporate AI into my current program, you should be able to be thinking about how am I thinking about AI, how am I thinking that my people need to use it, how can I protect against what I deem to be any risks, and incorporate that into my existing policies and procedures, into my existing program, into my existing training. So I think future proofing is very much about knowing what risks apply specifically to your firm, knowing how new risks can be incorporated and what your risk tolerance is and what the protections and controls that you can put into place are, and sort of just layering on with whatever base that you have created, which you would likely feel comfortable with and able to kind of tweak as necessary to account for any new risks.